If you own a second home in New York City, the next 2 minutes could save you tens of thousands of dollars or stop you from making a completely unnecessary mistake. Picture this. You own an apartment in Manhattan. You use it a few times a year. Your primary home and your taxes are out in the Hamptons. Last week, you saw the headlines about this new pied-à-terre tax. Your stomach dropped. You started wondering if it's time to sell. But hold on, because the headlines most people are reading, they're wrong. Or at least they're designed to make sure you don't fully understand what's happening. So let's fix that right now. New York City just passed a new annual tax targeting certain second homes within the 5 boroughs. The headline you probably saw: if your apartment is worth over $1 million, you'll be taxed. That is misleading. This tax applies to properties that are not the owner's primary residence. If this apartment is your main home, generally exempt. If you're renting it to a real tenant, generally exempt too. But if you're living and filing taxes somewhere else and keeping a place in the city as a second home, you're the target. Now here's the detail that almost every news story got wrong, and it changes everything. This tax rolls out in 2 phases, and understanding the difference could save you a serious amount of money. Phase 1 runs from July 2026 through June 2028. During this period, your property is not taxed on what it's actually worth. The city uses the finance department's existing assessed value. Here's a concrete example. Let's say you paid $4 million for your Manhattan condo. The finance department's assessed value might be $800,000, which is below the $1 million Phase 1 threshold. You owe nothing. That's why the tax starts at $1 million is so misleading. It's $1 million in assessed value, not sale price. You can look up your property's assessed value right now on the NYC Finance Department website. The link is in the description. It takes about 30 seconds. Here's how Phase 1 is structured. $1 million to $3 million assessed value, 0.4% annually, all the way up to 1.3% for values over $25 million. To make that real, a property with a $2 million assessed value would owe roughly $8,000 a year, not a catastrophe. And this is exactly why the headlines are so dangerous. Most people are panicking about a tax that doesn't even apply to them yet. The city estimates about 10,000 properties will be taxed. The real target is wealthy owners who file income taxes elsewhere. But there's a date you need to write down. 2028. Mark it on your calendar right now. That's when Phase 2 begins, and that's when this law gets real. The city shifts to valuations that actually reflect market value. Starting in 2028, the threshold jumps to $5 million in real value. But for high-end second homeowners, this is where the tax starts carrying serious weight. Between now and then, a lot can change, but 2028 is the date you need to be planning around. The cleanest answer: don't let your property qualify as a pied-à-terre in the first place. There are 3 situations that are generally exempt. 1, it's your primary residence. 2, it's the primary residence of an immediate family member. 3, you've signed a legitimate lease of at least 1 year with a real tenant who lives there as their primary home. What does not work, and the law is very clear on this: Airbnb, short-term rentals, seasonal arrangements, corporate use setups, or leases that exist purely on paper to dodge the tax. It must be a genuine arm's-length lease. Here's exactly what to do right now. 3 steps. Step 1, Go to the NYC Finance Department website and look up your property's assessed value. Link is in the description. Step 2. Talk to your attorney about a legitimate long-term rental. Step 3. Put 2028 in your calendar. Be prepared well in advance. Right now, go look up your finance department assessed value. 30 seconds and you'll know exactly where you stand. Knowledge is your best protection. Don't let a headline make your decisions for you. Subscribe for updates, because as this law evolves toward 2028, I'll be covering every update that actually matters.